Welcome to IQD DINAR News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. The exchange rate serves as a fundamental concept in the world of finance and international trade, representing the price at which one currency can be exchanged for another. It reflects the current market value of a currency in relation to another currency and can fluctuate based on a variety of factors, including supply and demand, economic conditions, political stability, and interest rates. For example, if the exchange rate between the US dollar and the euro is 1.20, it means that $1 can be exchanged for 1.20 euros. This direct relationship is crucial for businesses, travelers, and investors who engage in cross-border transactions. In contrast, the real effective exchange rate, Reer, is a more comprehensive measure that evaluates a country's currency relative to a basket of other major currencies. Unlike the nominal exchange rate, which focuses on the value of one currency against another, the Reer takes into account multiple currencies, providing a broader perspective on a currency's performance in the global market. This measure adjusts for inflation, offering a clearer picture of a currency's true value over time. The Reer is particularly valuable for understanding a country's international competitiveness. It considers how much goods and services cost in different countries, factoring in inflation rates to assess whether a country's exports are becoming more or less expensive relative to its trading partners. When a country experiences higher inflation than its competitors, its goods may become relatively more expensive, potentially reducing demand for its exports. Conversely, if a country maintains lower inflation rates compared to its trading partners, its goods may remain competitively priced, bolstering export demand. For instance, if the nominal exchange rate of a country's currency appreciates, this could be viewed positively at first glance. However, if inflation within that country is also rising significantly, the Reer could indicate a loss in competitiveness due to the higher relative costs of goods and services. Therefore, while the nominal exchange rate can provide a snapshot of currency value at a specific moment, the Reer delivers deeper insights into how that currency functions within the global economic landscape over time. Understanding the distinction between the exchange rate and the Reer is essential for policymakers, businesses, and investors. For policymakers, the Reer can serve as a guide for economic policy adjustments. If the Reer indicates a decline in competitiveness, it may prompt measures such as monetary policy adjustments or trade incentives to help stabilize or improve the country's economic position. For businesses engaged in international trade, the Reer can inform pricing strategies and market entry decisions. Companies might adjust their pricing models based on how competitive their products are in foreign markets, influenced by fluctuations in the Reer. Investors also benefit from a solid understanding of both measures. Exchange rates can affect investment returns, particularly for those holding foreign assets or investing in international markets. The Reer, by highlighting trends in competitiveness, can assist investors in identifying which economies are likely to experience growth or contraction, guiding their investment decisions. To illustrate further, consider a country that exports a significant amount of agricultural products. If that country experiences a higher inflation rate than its trading partners, its Reer would likely indicate a decrease in competitiveness. Consequently, the cost of its agricultural exports could rise in foreign markets, leading to decreased demand. This scenario would not only impact farmers and exporters but could also have broader economic implications. including slower economic growth and potential job losses in the agricultural sector. On the other hand, if a country manages to keep its inflation rates in check while maintaining a favorable nominal exchange rate, its Reer may show an increase in competitiveness. This could enhance the country's export capacity, driving economic growth and creating jobs. Furthermore, a strong Reer could attract foreign investment, as investors seek to capitalize on a country's robust economic position and its ability to produce goods at competitive prices. Over time, the Reer can also be influenced by external factors such as global economic conditions, changes in consumer preferences, and shifts in trade policies. For example, if a major trading partner enters a recession, the demand for that country's exports may decline, negatively impacting its Reer. Similarly, if a country's government implements trade tariffs, it could alter the competitive landscape, affecting how its currency performs relative to others. The Reer is particularly relevant in today's globalized economy, where interconnectedness between nations can significantly impact currency valuations and economic performance. As businesses expand their operations internationally, understanding both the nominal exchange rate and the Reer becomes increasingly vital. Companies must navigate the complexities of multiple currencies, inflation rates, and changing consumer preferences to remain competitive in foreign markets. In conclusion, while the nominal exchange rate provides a straightforward measure of currency value, the real effective exchange rate offers a more nuanced view, integrating factors such as inflation and competitiveness. The Reer plays a crucial role in evaluating a country's economic position, guiding policymakers, businesses, and investors in their decision-making processes. As global economic conditions continue to evolve, understanding the intricacies of both exchange rates and Reer will be essential for navigating the complexities of international trade and finance. By recognizing how these measures interact and influence each other, stakeholders can make more informed choices that align with their economic goals and objectives. Ultimately, the interplay between the nominal exchange rate and the Reer underscores the importance of a comprehensive approach to understanding currency valuation and its implications for global economic dynamics. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.